Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Thursday, February 22nd, 2024. Let's spend a little time on the big picture, work our way into the day itself. Just so you know, if we happen to test this 175.81 channel top, this is a weekly chart, by the way, it can absorb selling through March and even perhaps into later year. We did close above this formation several months ago. We tested it about a month and a half, 2 months ago. It can continue to contain monthly selling pressures, possibly into later year. And from here, we can turn back up, possibly to new highs. At the very least, I'm going to say into the mid to upper 190s, where we find a channel structure. This is the daily chart between 195.41 and 197.39. Now, the question is, will we fall into the mid 170s? Now, as you're well aware, we've been testing the speed line that we've reduced to a minor point at 180.68. We've been slipping below it. We haven't closed below it, but because of the sloppiness, we're just not crazy about calling it a trend-defining support level any longer, and we're now opting for buying Apple on strength. Either, I think you can buy the mid 170s all day long. We're not going to see that today. But our next buy signal on strength would be a settlement today above 182.83. And that should, in stair-step fashion, yield 186.44 within 1 to 2 days. That's a descending two-third speed line, which can also contain session containment. In other words, we've got a lot of good day trade and 3 to 5 day swing trade levels in here. But in terms of the 3 to 5 week swing trade, it really is still buying the mid 170s if given the opportunity, which I've already shown. I'll take you back to this chart here. There's just I actually could go through a number of charts. We also have a descending channel bottom based off of these highs at 176.19. We've got that weekly structure I've already shown at 175.81. The question begs, will we see this mid 170s? And the answer, from my perspective, is yes, so long as we continue closing below this short-term channel top. This I don't want to call it a weekly resistance area because we're so close to falling back to long-term support that we're hovering just above in all in a relative sense. So, 182.83 can contain daily buying pressures. And as I think I said yesterday, and quite possibly into later week, into early next week, and from here we could fall back to 178.62, simple trend line over the next several days, and perhaps by the end of next week into the significant mid 170s, where a buy opportunity would present through March trade. But the question is whether we'll get down there or not. When you've got just sort of a long-term support all piling up in the same area, the market oftentimes just refuses to test it, as it did a couple of months ago when we were in early January. Once again, I'll take you back to this chart. A buy signal presents through the rest of the week above 182.83, which isn't saying much. Over the next day or two, 186.44. Also able to contain session strength. Solid day trade levels. Solid 1 to 2, 3 to 5 day swing trade levels. If you're bearish Apple, for whatever reason you may have, I see technically 182.83 is really the only level to sell for the next few days. If we close above it, 186.44 likely within a day or two, where we can also place a daily high. And once or if we close above 186.44 within the next 2 to 3 days, we should reach 190.14. This descending two-thirds speed line able to contain weekly buying pressures, and we could fall away from here for more than a week perhaps. It would be a settlement above 190.14 that would then signal within a week or two this 195.41 to 197.39 region. So it is very stair-step. I will say, as I've been saying now for the last week or so, that if we slip into the mid 170s, that is a 1 to 2 month swing trade into what is now the mid to upper 190s, but will at that point be more in the low 190s, low to mid 190s, if you catch my drift. That would be a new channel bottom, new channel structure. I don't want to go that deep in the weeds, but you probably can imagine that if we put a low out right about here, the trend line will be off these lows against these highs, and it'll be more in the mid to upper 190s. I'm sorry, in the low to mid 190s. But right now, that's really what I want to say is over the next month or two, if that is your time horizon, you're buying the mid 190s, you're selling the mid, I'm sorry, you're buying the mid 170s, you're selling the mid 190s. And I wish I could present some line study that if we closed above would clearly signal bullish continuation over the next few weeks into the mid to upper 190s. But I don't. And really what I have is 190.14. That is our pivot point into March trade. If settled above, yes, 197.39. But until then, we could top out there on a weekly basis. Is there anything else that needs to be said? No, I'm just going to leave it at that. Holding below 182.83 does allow the mid 170s over the next week or two. And if we close above 182.83, I don't see the mid 170s anytime soon. I see 186.44 within a day or two, where we can top out on a daily basis, and if settled above 190.14 within several more days. Very stair step on the way up. We would, in the weeks ahead, have a significant buy signal if we were to close above 197.39. I think I've said it all. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial. On Wednesday, we put out a stock pick on Disney. You might want to check that out. We are right on the edge of a long-term signal that should play out into later year. And you can see all of it by just signing up for wickedstocks.com and taking advantage of our 5-day free trial. I'll be back tomorrow, of course, with Friday's Apple Report. You have a great evening.